Welcome to the Work-Life Balance Podcast. I am Kara.
And I am Maggie.
Together, we're a power real estate team with the Bajetti Partners in Nashville.
We believe that the hustle culture of today's driven entrepreneur who lives and works in Middle Tennessee requires balance.
Hey guys, welcome back to Work-Life Balance with Maggie and Kara. Today we have a very special guest. Jim Toney's in the office with us, and he is the VP mortgage lender for Guaranteed Rate here in Nashville. So welcome.
Oh, thanks for having me on.
Yes. Thanks for coming on. We appreciate it.
Yeah.
Taking time out of your day.
We love to speak to new lenders and get the scoop on what's happening in the crazy market. And
it is crazy.
It is crazy. It's very fluctuating. So we figured you wouldn't be one of those boring lenders that only wants to talk about numbers.
Yeah, definitely not. So
tell us a little bit about, who you are and what your story is.
Well, I originally from East Tennessee, grew up. I served in the Army for 8 years, got out, went to UT, and funny story. Oh, yeah, ball for life. So, and people ask me how I got in the mortgage business. Met a guy. I was playing some softball because we're in East Tennessee, and that's what rednecks do. And a guy had a nice boat and a truck. I'm like, "What do you do?" He said, "Mortgages." I'm like, "I think I'll do mortgages." So that was my entry into it. Yeah, 20-something years ago. So and it's been a great career ever since. So now currently live and work in Brentwood, Tennessee. Married for 25 years. And I got a freshman at Auburn University and a high school junior at Ravenwood.
Wow. Get your hands full.
So, yeah.
So do you have the big truck and the boat?
I don't. I've got the truck, but we had to sell the boat when the college kind of trumped the boat. So,
I hear that.
But we have friends that have them, so that's good.
Oh, yeah. Then you don't have the financial burden of it, but you still have the fun.
Exactly.
100%.
So we wanted to have you on today to talk a little bit about just like your experience, everything. But first, I know that the one deal that we've done together was VA. So thought we could talk a little bit about VA loans and benefits, information, stuff that people might not know.
No, it's perfect. Yeah. And being a veteran myself, obviously VA loans are kind of, true to my heart. My oldest son, he also served 6 years. And so we're a big military family. So we, the VA loan is something that you kind of hear about. There's ads on, radio, TV, this and that. And they're kind of frustrating in some aspects because there's a lot of fluff, but really no substance to it. So you're just like, oh, I don't know, this and that. But typically it's a great opportunity for soldiers, for veterans because also one of the common, I guess, misconceptions of VA loan is you have to be a veteran. No, you can be an active duty soldier and use your benefits to buy a house while you're stationed at Fort Campbell or wherever you may be. But one of the nice thing is it's obviously veterans and soldiers know that we don't make a lot of money, right? We're not serving our country to get a big fat check, to get the new truck or new boat. But so it makes it a little bit harder to save money for the down payment. Well, VA is great because there is no down payment. And a lot of times, depending on the market, when you got great real estate agents, a lot of times we can get the seller to cover the closing cost. Mm-hmm. So really, a soldier or a veteran can go in there and buy a house for, in a lot of cases, home inspection, $350, $400. Right. They are going to give some earnest money, but they're going to get that money back at closing. So a lot of times, for less than $1,000 out of pocket, they can become homeowners, start generating, equity, start building wealth through that process. Because the down payment's one of the things that probably deters most home buyers in certain markets away the most. Sure. And in the military world, it's exacerbated because there's just not a lot of money left over at the end of the month.
Right.
And on veterans, depending on. Now, the nice thing is, too, with no money down, you don't have what's called mortgage insurance. So the VA doesn't charge a monthly mortgage insurance, which also adds to the cost and the payment. There is a funding fee that's rolled in, so there's nothing out of pocket there.
So I was going to ask you.
Yes. So that's kind of how that's covered. But depending on if you're disabled at all, over 10%, then that gets waived.
Okay.
So it's also a great benefit. The one we did, Clay was over 10% disabled. Mm-hmm. So there's no money down, no mortgage insurance, nothing rolled in. So that's a best case scenario.
Right.
VA is also a little bit more generous when it comes to credit scores. You got a few dings on your credit, VA is a little more forgiving. Debt to income, VA is a little more forgiving there as well because they know veteran soldiers, maybe we're not making as much as in the private, private sector. So that can allow you sometimes to increase your purchasing power. You may have some side income, this and that, so you can afford a monthly budget of $2,500, but conventional or FHA might tap you down a little bit, where VA, in theory, doesn't have a limit. So there's just some of the benefits. The process is the same. Sometimes listing agents out there, they're like, oh, we don't want a VA loan. The VA, the appraiser is going to rip us apart. When in reality, it's essentially the same guidelines as FHA. Yeah. There is nothing scary about it. Okay. Sometimes listing agents get a little worried because, hey, they're not putting any money down. You know what I mean? How qualified are they? Well, in most cases, these veterans or soldiers have good credit scores. They've got jobs that are paying well now if they've got out or some other stuff. They just had the hindrance of not being able to save, during that 4-year term, 8-year term, or that 20-year career enough to have the down payment. So they're not any riskier. They're not defaulting it at any higher rates than, other types of loans. So it's really nothing to be afraid of.
It's a good misconception to kind of kick out, Like that is we're kind of dealing with that right now. We just submitted one for a VA buyer, and I don't know if that scared her a little bit, but it seemed like it. So that's a good misconception to kind of boot out the door.
Well, and the other thing is too, speaking of that, because how the market last year was crazy. Oh, we're paying above appraised value. Well, there's also, falsehoods out there that, VA has to appraise. No, a veteran can bring the difference. If they have, just like a conventional buyer can bring the difference. There's no guideline that says if it only appraises for $500, the veteran can't pay $550.
Okay.
But the veteran's got $50,000, and that's where actually it worked out well in a couple of cases, because you had cases where they had the money for the down payment, but now we had to pay over appraised value. Well, for the VA loan, we just took that down payment and that paid the spread.
Okay.
So it's a no money down. They paid the $50,000 difference. So it actually was really a little more advantageous last year in that market. So
I think agents need to be the ones that are actually do VA. It is a different beast when you're writing your contract as well, right? Because you can't ask for a certain amount of credits. You can't ask for, they can't pay for certain things.
Right.
Seller has to pay for those. So do you want to give like a quick rundown on that? Like how it's a little bit different than a traditional buyer?
Yeah.
As far as
that's a great point. One of the main things is, and it's not expensive, endeavor, is the termite letter.
Yeah.
So the veteran's not allowed to pay for that. So that's just going to fall on the listing agent or the buyer. Or the seller. Now, a lot of times what I'll do is I'll just, say, hey, listing agent, I'll buy you a $50, gift card to a restaurant, but can you just cover the termite, right? But there's other non-allowable fees. Mortgage lenders, title companies get creative over the years, so pretty much those have all kind of gone away.
Yeah.
You just change the name, change the line item of that fee. This fee moves here. I don't know if I'm allowed to say that, but anyway, it's one of those things where
creative. We'll just say that.
There's very little that can't be covered now by the seller on a VA loan. Yeah. So most of our VA loans are done with no down payment and the seller covering every closing cost, and our client getting a check back at closing.
Okay.
For the earnest money they paid. You're allowed to get back up to the earnest money plus any tax proration back.
Okay. See, I knew you could get your earnest money back, but I didn't know that about taxes.
So you can actually get a little bit more. And another kind of unique thing about VA loans is the seller can actually pay off debt for the buyer as well.
Really?
So if we need to pay off a $3,000 credit card in order to qualify, that can be paid on the HUD out of the seller as well. So there's a couple of little caveats and creative ways to really maximize the purchase price on the VA deal.
See, that's where a good lender like yourself that's experienced in VAs comes in, because even though some of those, and I've been in the business as long as you, I didn't know that the HUD could show a credit card payment.
Yep.
Those are definitely things that benefit your buyer in so many ways that a traditional agent wouldn't have a clue about unless you had somebody guiding you, right? The VA is just totally different.
Totally different.
Yeah, and a lot of lenders don't, depending on what market they're in, they don't do as many VA loans.
Correct.
Now, because in our market, in Williamson County, you won't see as many VA loans. Obviously, you'll see a ton in Clarksville. But as you're spreading out, and as you're marketing that way, it's a great opportunity to buy. The other great thing is a VA Jumbo, which is a fantastic product that essentially can allow you to get a jumbo loan for less than 20% down.
Wow.
Because you're only putting down a certain percentage of the spread of the loan limit versus the sales price. So I did loan for he's working for Meharry now at the dental school, but moved here from Hawaii, and we did a VA jumbo. They bought a I think it was $2 million house, but instead of putting down 240, they only had to put down about 160.
Good for them.
Because it was just a spread,
right?
And he was over disabled, so no funding fee. So you've got essentially a jumbo loan with less than 20% down, with no mortgage insurance, at a better than market rate versus a jumbo or conventional. So the VA jumbo is another thing that doesn't get talked about enough.
Right.
In our market with the average loan sizes, it is something that, needs to kind of get the word out there a little bit on that as well.
And you can only hold one VA loan at a time.
Well, that's another.
Is that a misconception?
Yes.
Really? Okay, clear that up, because we've had that inquiry a couple times, actually. A personal friend of mine, he was actually looking at getting an investment property. He's a veteran, and he already has his primary and a VA loan.
Right.
And he wanted to get an investment loan under VA, and he was told he could not do that.
Okay, well, in that case,
Different?
he was told right.
Okay.
But like our client we closed back in February, you can have a VA loan on your primary residence, convert that to an investment property, and then go out and use your VA benefits to buy another owner-occupied place.
So it needs to be owner-occupied.
Yeah, so if you like in your case and your friend, if he was going to convert his to an investment property and buy a new house to live in, then yes, there's what's tier 2 eligibility. So most of the time, the veteran, when you get a VA loan, you're not using your whole entitlement up. Okay. There's a formula and a calculation to kind of say, hey, like in our case, the client had to put down, I think, $60,000. But he was buying way up in value, and he had a pretty good sized home he was converting. Yeah. But you definitely can hold 2 VA loans at the same time. Okay. With tier 2 eligibility. You just need to experience lender, because some will say, oh, sure. You forget about the calculation of the max loan amount. You forget to tell the client, yes, but depending on the sales price, you're going to have to put down a certain percentage. Okay.
And it's got to be owner occupied. So that's
and owner occupied.
That's the important thing to know. Okay.
Now that you brought that up, one way to get, let's say a veteran wants to kind of get into the investment market, right? He doesn't own a house, or she doesn't own a house, and you can use your VA loan to buy a duplex. Okay. And rent out the other side. Because
you're still
you can buy a 4-unit because you're living on one side. Yes, you buy a 4-unit using VA.
Okay.
So it's a great opportunity for someone who doesn't have a lot of cash on hand to put down 25% for an investment property. Because I work with a ton of investors, but to make sense, it's 25% down.
Sure.
I mean, to be able to get a quadplex for 0 down on a VA loan, that would be
a
no-brainer.
There's a few different rules and guidelines there, but it's still going to be a much easier path to go ahead and get, if you want to go that route.
Right.
So that is another great way because you will see ads that say, did you know you can use your VA loan to buy an investment property? That's what that ad's talking about, right?
Okay.
It's talking about buying a duplex or a 4-unit.
Trying to hook you in.
Yes, of course. Which, hey, it's great marketing.
You ask questions.
Right. So,
it is, yeah. You
but yes, in your friend's case, you can't use it to buy a true SFR investment property that you're not going to be living in.
Well, that's good to know.
Yeah, we're learning so much today. I love it. So, like you said, you've been in the business over 20 years. So, give us some funny stories / lessons that you've learned so far.
Well, there's a lot of stories over the years. One story, now it's not exactly funny, but one of my favorite loans I ever did, I had a little office open in Brentwood, not far from the Old Hickory exit. A young kid walks in, he's in a Waffle House uniform, right? Just got off his shift. Just walks in the office, right? Didn't know him at all, didn't know he just saw our sign. So I had him come back and talk to me. He's like, hey, I just want to get qualified to buy a house. I'm like, okay, so you work at Waffle House? He's like, yeah, I've been there since I was 16. He was 25. But as we went through the process, this kid, and this was back in 2004, didn't make much, right? I mean, his pay wasn't a lot, but he had, over the process of 9 years, saved like $18,000.
Wow.
He wanted to buy just a little house in a town that none of us have ever heard of, right? For like $70,000. But he just walked in, and he didn't have a ton of debt. He had good credit. It was just interesting to see this kid that a lot of people just would have judged from the start. Oh, sorry, I'm busy. Come back later. You know, just sit down. We talked, and he had done everything right. And I know when I was that age and I was in the Army, I wouldn't have had the discipline to even save anything, much less 18,000. Right. And it was remarkable that this kid had just put his head down and grinded, making next to nothing, and found a way to save and had a goal in mind. And at 25 became a homeowner, which That's just always sticks with me that kid was able to do that.
I love how he just walked into your office.
Oh, he did. Yeah, I was just like, because nobody walks into our offices. People talk about storefronts for mortgage lenders. We're like, nobody walks in.
Yeah.
Nobody's just going to randomly knock on the door of a mortgage company and say, hey, I want to get a mortgage. So, but that was kind of thing.
That's fantastic. I always say it's easier to work at McDonald's to get a loan than it is to be self-employed.
100%,
so that just completely verifies what I say.
It's true.
That is 100%.
You can work at Waffle House and buy a home.
It might look a little different than 2004, but
still,
you still get there.
It is still one of those things. Yeah, the challenge is the self-employed. But, some of the other, as far as like funny stories is, I had one deal, so we got the client approved. He's under contract on the house. We're just doing a regular conventional loan. We're rolling through. We get the appraisal back, and I call the agent. I'm like, did you know that there is no flooring at all? There's no subfloor. There's nothing.
Oh, no.
There was no flooring in this house at all, right? It was just rafters. And I'm like, think about telling me that, because that might be a problem. You know what I mean? Like, so it's just one of those things where it's kind of a newer agent, kind of not as experienced, but I was just like, did the listing agent not think to ask, hey, what type of loan are we doing? I said, because, to buy a house, we got to have floors to do a conventional loan, right? So I was just amazed that somehow or another they had just shown the house and stepped on the beams throughout the house. And there were some other problems with it as well. But I'm like,
or maybe they never even stepped foot in that
maybe
home.
They did. Maybe we just bought a side and scene.
Yeah, they may have, because there was a time when people were doing that.
Yes. I'm like, that may be a problem.
That's going to change quite a bit in your loan process there.
Then, you run across all kinds of clients. You have clients that are just, oh, shucky darn, they love you. You go to their house, you have sweet tea and everything's great. You have other clients that sometimes are beating you up the whole time. And but I think my military background got thick skin. I always tell my clients, hey, this is going to get emotional. You're going to get fired up sometimes. You call, you yell at me, right? Mm-hmm. I can take it. I'll put you on speaker. You just let it out, right? Whoever you want to bring, we'll just vent, right?
Yeah.
You just got to have somebody to kind of be your punching board, let it out. Because for us and what we do, it's a transaction. Not that we don't care about our clients, but we do this for a living.
Right.
We understand there's going to be some ups and downs. There's going to be this, but for some buyers, it's not. It's super emotional. They're super stressed about. You're asking for a pay stub and they're flipping out. You're just like, literally, if you probably got it in your email, the direct deposit slip. I know, I just don't have time to look at my email now. I'm like, okay, well, you're going to have to, right? So, but it's one of those things where just learning over the years just how to kind of interact with just the different personality types. Our client, which I won't say his name, but it was great. Loved the guy, but he was type A, this, and bitched about everything through the process, right? And that is the other thing. Going to the VA is not that you have to be a veteran or a soldier to do VA loans. Where I see the biggest benefit for me is being able to speak the military language, right? Being able to understand how we're built. Because you're built a little different when when you go in and you serve 4 years, 8 years, when you're out, your mindset doesn't change a whole lot. So it's a little more direct. It's a little more this. Colorful language is probably a little more prevalent. So, so that's been one of my huge strengths when I'm talking to veterans and active duty soldiers, right? I know the slangs. I know the acronyms, right? I know what they're going through because I did it for 8 years, right? Like, I know the stress and struggle. I know you're trying to make, your wife happy. So we're trying to push this out because she's stuck at the house while you're at Fort Campbell doing your thing. Like, a lot of times you're moving to an area, you don't have a lot of family. So it's kind of being able to navigate those type of things. So, that's why for me, I love working with veterans and soldiers, but it does help when you're able to take it with a grain of salt that, hey, he's just a Marine. I mean, what are you going to do, right?
We say that all the time. It is a thick skin game.
Yeah, that is. Oh,
on all aspects, because it's a roller coaster ride the whole time. And you're right. They're super emotional.
Yeah.
They're making the biggest purchase of their life. We are their team, and so we're their cheerleaders, and we're also their punching bags and their shoulder to cry on and to hug at the closing table, right? So
exactly.
We have a lot of hats going on. So Maggie and I always say, and then in fact, I think I just told Micah yesterday, this is like pull your big girl panties up because this is like there's no crying in baseball. You gotta really do it. And
I love that you just threw that quote out.
Yeah, it's not easy, but I feel like it's okay. Like we're playing such a pivotal point.
Yes,
and you as a team member, us as a team member, to make this whole thing flow for that person. it's such a great experience.
Right.
Whether it's the highs or the lows of it. As long as we can close it, we're happy.
Right, exactly.
we'll be up the whole time.
You have to be able to work through it together. Like, I know you and I have had phone calls. It's like, okay, well, I'm going to scream right now on the phone so I don't scream later, like that kind of thing. But we're all here to help each other to get our client in the best position.
No, and it is great, because the more synergy we have together, the more synergy your title company's playing a part in that, your insurance agent. It's because on that deal, there was a lot of questions about that, this, that, past claims, flood, that Kyla was able just to kind of work through and navigate in the same way, and having team members who are built the same, right? We're all thick skin. We all can take this. We all understand, hey, our goal is to get from here to here. And whatever happens on the way, we don't take any of that personal, right? Because like you said, we're always hugging at the closing table.
Yeah,
that is always a celebration. Everybody's always happy. You'll get clients who'll like, I'm so sorry, I was a pain in the ass. You know what I mean? Like, it's just fun for me to kind of that ride, because to do what we do, all the realtors, lenders out there, it's not for the faint of heart. You've got to be built a certain way, right? To survive and to have success in our business, because my wife always says, like, she would cry every day, right? She's a teacher, so she's got a ton of patience.
Totally.
But when I'll put some people on speaker sometimes and they're venting, they're doing this, she's like, oh my God, I could not do this, right? So, I'm like, babe, they're just, because we understand when you hit those peaks and valleys and those pivot points where, the appraisal comes in a little low. We know this is going to be it's about to start, right? Or the home inspection's a little worse than maybe, so now they're mad. Dang, Maggie, I thought you said this house had good bones. Look at this home inspection. It's 48 pages. So I want everything fixed. So, and having to navigate through those things. So.
Well, that's the thing, is we always talk about making solutions and bringing the solutions to the client instead of, here's the fire. Now telling the client the drama and how do you want No. We got an appraisal issue. Okay, we've already talked to the appraiser. We're challenging it behind the scenes. We're coming to the client and saying, okay, we've got X, Y, and Z to show the best comps to the appraiser. We're going to get through this. Like, don't panic, you know? So it's all about solutions in this game. I mean, I feel like that's
it is. And that's why I say I equate it to, like, just, when you're on an airplane, right? You need the hell of a pilot when you hit turbulence, right? In most flights, you're going to hit turbulence, right? So you have to have somebody that is there, like you said, solutions. Hey, we don't have problems. We have solutions. Okay, here's where we're at. There's no point in looking back. Like, we're here. We're all going to work together. We're going to get the listing. We're going to do whatever it is, whether it's repairs, the appraisal comes in short, whether there's a hiccup on a bank statement. There's never it's a problem. It's like, okay, here's where we're at. Here's what we're going to do to fix, we're going to have a solution, and we're going to get to the closing table. You get your keys. You're going to love us, right? So,
and I think it's important, like we were saying earlier, to understand the personality types and the different people that you are talking to, because that's definitely going to affect how you're going to present those problems or solutions or whatever the case may be. Whatever you're talking to them about, you're going to talk to everybody differently. So it's important to be able to know the differences there.
That's where your little psychology comes into
play. I had to drag it in somehow. So what are some differences that you've seen in the lending side of real estate from when you first started in the business to now?
Initially when I started, obviously I was part of that subprime crash, the whole global economy market. So obviously subprime's gone away. Now, that was probably a case of us getting way too far on one side. All the changes in 2010, 2011 were kind of too much overcorrection. So I do think, in the last 20 something years, we've seen, way too loose and way too hard. But I think we've kind of settled into a pretty good, make sense underwriting lender process flow, right? So while it was challenging to get here over about a 10-year span, I do think we've kind of hit that sweet spot to where now it's not super hard, but it's also not everybody can buy a house either, right? Because we weren't helping anybody out doing 80-20 subprime loans with stated income, right? All we were doing was what happened was creating foreclosures, right? So you want the house to be a blessing, not a curse. And we created a lot of curses back then. Now, as a young, dumb loan officer, I didn't know any better. Like, I'm just doing loans like the adults do, right?
Robo banking.
But it's one of those things where I think we have trended in the right direction. Interest rates ebb and flow. I know now they're higher. They're not at, 15, 18 years ago, they were about this point, right? 6.5%, 7%. So it's not, those swings haven't been as bad as maybe the perception is out there. One perception is underwriting's gotten so much tougher. It really hasn't. If you, Kara, I will say you brought up self-employed. Yes. Self-employed people. Yes, it is a little bit of a different challenge.
It's a nightmare,
but it's for the most part, it's still a common sense owner. If you've got a W2 job, you've got your money there, and there again, have an experienced lender. We can work around if there's deposits that maybe you've got a source where money's coming in and out. That you have to navigate through those things. But and I think the shift. Really, it's just been in kind of a little bit, we went from almost no regulation and whatever to way too much regulation to now I think we're in a pretty good sweet spot. I don't like the way appraisals are handled, but outside of that, that's probably my only really negative I think that's kind of carried over since 2011.
That's pretty good to hear that you feel pretty comfortable with where it's landing.
Yeah.
Oh, yeah. Because I think you're right. Like the pendulum has swung so far both directions for the last, 20 years that I've been in it, that you just don't know where it's going to be. And people were getting so excited about these 2.5%, but that wasn't reality.
Right. Exactly.
And I don't know if we're going to see that again. So, maybe,
yeah, more than
but
likely
not in my career.
Maybe if there's another pandemic or something
I don't
crazy,
know, but 5.5%, 6%,
it's not bad.
It's not a bad compared to 18% in the 80s.
Right. Or compared to 100% when you're renting, right? So I've got a buyer who's,
love that.
And renting sometimes is a good option, but I've got one client, he's been looking for 8 months and he's paying $2,500 a month in rent.
Oh my gosh.
But he won't pull the trigger because he's wanting rates to get back in the fives.
Yep.
I'm like, but you're paying $2,500 a month to somoneone else's mortgage, right?
Yeah.
You're paying a mortgage, right? And it's 100% interest because you get nothing out of this. So, it is funny that number just kind of gets in these people's heads. And what I talk about is what's your budget? I can spend $2,500 a month on housing. Okay, well, here's what you can buy for $2,500 a month. The number for the rate really doesn't matter.
Right.
If that gets you into a neighborhood that you want to be in, you can afford $2,500, then why does it matter if it's 5, 6, 3?
Right.
So
you don't initially talk to your clients about the rates. You just initially talk to them.
No, I talk about what's your budget. That's my first question with any client is how much are you comfortable with paying each month for your mortgage all in?
I like that.
They give me a number.
That's exactly what that's how the conversation should be started.
Because at the end of the day, that's what's important.
It's 100%.
The number doesn't matter.
Not at all. It's your mortgage payment.
They can be 3%, but if your payment's $3,000, you can't afford $3,000.
This is what I preach all the time. Right. It's all about what you can afford.
It's what you can afford. And if you approach it from that mindset and you let the clients know what they can get for $2,500 a month, well, that's a much easier conversation when it comes time to lock and discuss rates. Because then if they're like, oh, I can't believe rates are 6.5. Well, I know, hopefully there'll be some opportunities to refinance, but we're in that monthly budget you wanted. And you found, Maggie found you a great house that you love for this budget. So how important is that number? Well, that's a good point. It's really not that important. It's a
good point.
Yeah, it's just getting that mindset change with buyers to get off that stupid rate number.
Yeah, and
because rates are going to change all the time.
I think that's a good thing for other lenders to hear. If any other lenders are listening to this, to approach that conversation differently because it might help you get to that closing table or get that personal loan that they're comfortable with having.
Yeah, I've got friends every day in this business I've known for years who. Every day they're worried about, oh my God, did you see rates today? Did you see rates today? I'm like,
chill out.
I don't work for the Fed. I can't control the rates. All our rates are going to be similar. So I don't care. I literally am one of the few that don't care because I can't. I just don't worry about stuff I can't control.
Exactly.
And I can't control that. But if you approach it from the budget mindset and the cash flow, then that's all. To me, that's all that's important.
Well, because if you have your lender over here freaking out about, oh my gosh, the rate's 7.5, then that's obviously going to rub off on the client too. Because the client's going to be like, oh my God, they're what? When they probably didn't even know what that even meant in the first place.
And they don't have a clue what any of that means.
No, exactly. It's you have the lender who's like, oh, don't worry about it because I'll refinance you in 6 months.
Yeah.
We have no idea where rates are going to be in 6 months, right?
And we shouldn't even say that.
Very true.
Because you can't. That's why I also tell people, assume you're buying this without being able to refinance it ever, right? So can you afford this? Yeah. Here's what you can get, and assume it's always here.
Then you hated that quote, date the rate. It didn't make sense, did it?
To me, it makes sense in a certain aspect of, yes, historically rates have ebbed and flow, right? There may be an opportunity to refinance, but what if rates drop, but home values drop? Well, then you don't have the equity to refinance, right? Yeah, rates are lower, but you still can't refinance. I just want people to make sure, it goes back to the blessing, not a curse. that when this client closed on the house, that in a year from now, they're still happy with us. 2 years from now, they're still happy, that we didn't imply something different. Well, damn, Jim, I only bought this house and stretched my budget because you said that this rate was temporary.
Yeah.
You know, we're 2 years in and I've run up credit card debts because I couldn't pay this long term.
Yeah.
Well, so then what do? Right? Yeah, I got the transaction, we closed it, but now I've lost a client for life. She's probably been mad at you two for referring me. So you guys lost a client. So for me, it's just, I like to go, hey, here's where we're at. Assume you can't refinance. If we can, that's just a benefit, right? If rates drop 2 points and we lower your payment $400, hey, that's a huge win for us. And that'll make your life easier. But you need to go in this assuming you can.
Absolutely.
That brings up a point that I've actually wanted to ask you because I have just thought about it right now. But this 2-1 buy down, does that make you a little bit nervous? What's going to happen in 2 years with the people that, you know, they're used to a 5% right now, and in 2 years, 7% mortgage payment looks a little bit different. You think we're going to jump into a foreclosure market when that starts to change?
I do think
it's a good question.
That's a very good question, a very good point. And it's why I didn't push 2-1 buy downs as much as some.
Okay.
Right? Because it goes back to what if you can't refinance in 2 years? What if you can't refinance in 1 year? And even that 1% bump puts, what if the economy goes a little bad and get downsized, you're paid. Sure. So there's so many reasons why I wasn't a huge fan of that, because going back to the home values. So what if you lose the equity? You know, because a lot of times you're getting the seller to pay the 2-1 buy down, right?
Right.
Okay, well, one negative of that is that means that you overpaid for the house 2.5%, right? So you use some of that potential equity to buy your rate down. Now, in some cases, it was the right thing to do, right? You've got clients, it was more of a luxury. Hey, that's fine. Let's just roll it in. Let's pay it down. You know, this is great.
Yeah.
I'm going to be getting a year in bonus, whatever. It's fine. So I didn't like it utilized to get, especially first-time home buyers, into a house just because they could afford that year one payment.
Right.
That's what I'm thinking. That's
focusing on that year 3 rather than that year 1.
But you're qualifying on year 3 though, right? When you're qualifying on that mortgage payment, not year 1 mortgage payment.
You are, but that's why I always ask the budget question. What are you comfortable with paying?
Okay.
Because there's a lot of stuff on our monthly outgoes that aren't on the credit reports, right? Netflix isn't on your credit report.
Your grocery bill's not.
Your grocery bill's not. Your gas bill's not.
We were just talking about
your
this
alcohol intake is not.
Yes. So
that changes things.
Yeah, and my daughter dances. Well, that is not $1,000 a month, right? That's not on my credit report. So on paper, could I afford a certain number? Yes. In reality, I can't afford that number. So it's just one of those things where I'm not anti 2-1 buy down. It just has to make sense, and the client just needs to go into it going, hey, I just get a bonus of savings. Our client did one, right? And it was great. The way it worked out with the builder, it made sense.
Right.
But for them, it was a luxury the first year and a luxury the second year. They were fine paying the fully amortized rate.
Sure.
So as long as it was done smart, but I do think you're right, Kara, it could cause foreclosures because when the rates adjust, if there wasn't an opportunity to refinance, if values come down a little, then you're going to have people who can't make the payment.
That's what I'm
And then they don't have the equity to sell.
Something to be watching out for.
Right.
I mean, when did that get implemented? Just this last September-ish?
Yeah, it got
so very
super
recently.
popular. Yeah, towards the end of last year.
Is it planning on sticking around for a while? Have you heard any different?
Yeah.
I haven't heard any different.
It's funny how you don't see as many ads and many people talking about it, right?
Yeah.
Like, because I do think people are starting to realize, and mortgage companies are too, because we don't want a bunch of foreclosures on our books, right? Banks don't want foreclosures. So I think it just kind of, everybody's like, well, we need to pump the brakes on this a little bit. And let's only utilize this when it makes sense for the right client, right? So like I said, when it's a luxury to save the first year in the seller's covenant, by all means.
Yeah.
Because essentially all you're doing is it's just subsidizing the savings for 2 years. So it will be interesting to see in 2 years, right?
Yeah, for sure.
Because you never know where the economy is going to go.
Right.
Yes, we are assuming inflation is going to get under control at some point. Maybe it doesn't, right? Maybe by getting it under control, we create a recession, which then people lose jobs.
Yeah.
Well, then it wouldn't matter what the rate was then. But it's just one of those things where I've learned over 25 years, I can't control any of this.
Yeah.
And I can't do loans based on assumptions a year from now or 2 years from now. Because I've, like I said, lived through crashes, lived through downturns, to where we don't know anything. Right?
No, we're just on the ride.
Yeah. So, and that's another question I wanted to ask you is what were some of the things that you did to get through those harder times? Because I know this is not an easy business to be in for our side, but your side especially also. So.
You know, it's always for me continuing to grind and continue to generate activity, right? even when you're not doing transactions, even if you don't have any buyers, it's still going through the process every day and doing what you're supposed to do. And eventually you're going to get through that. And it also keeps you sane, right? As a loan officer, when mortgage applications are at 30-year lows, if you're not going to the office, if you're doing this and that, you're just making it worse, right? So for me, it's just staying in that mindset of this is temporary. I'm going to take advantage of some time now that we didn't have last year because we were so busy to get back to the basics, to learn more about the ins and outs of a renovation loan, to touch base with some past clients that I've probably been neglecting, right? Sorry, all my past clients out there.
We've been busy, sorry.
Exactly. So, but it's one of those things of just, I utilize this time to stay sane, but just grinding and getting back to the basics, right?
Keeping your head down.
Update my database, making sure of those things. Making sure I'm loving on my realtors, my referral partners, trying to reach out to new ones, setting up lunch and learns, those type of things. So when it does turn around, you're still in the right mindset, right? Because yes, a lot of realtors and mortgage people have gotten out and will get out of this business. Because if you're not built for the ups and downs, you can't handle this, right?
Yeah. Did you read the stat? And I was just listening.
We just talked about it on our last episode.
It was 90% did not renew their license this last year.
For real estate?
For lending.
For lending. Oh, wow.
Not realtors.
Did not hear that.
Yeah.
That is wild. That's a massive drop of lenders. And it's so funny on the flip side of that, they've been very quiet because last year was such a hot market. Everybody was going crazy. My phone blows up with lender lunches now. Like, can you meet me? Can you meet me? Can you meet me? I'm to the point of like, no, I can't. I already have who I want to use.
People you've never even talked to.
No, they don't know. They're just looking at active agents.
You're right. And it's funny because I kind of stopped making those cold calls for that same reason. I'm like, these poor realtors are getting bombarded now. And you guys don't know the quality or professionalism level of the loan officer talking to them. They don't have any reason to call you, right? So as I'm making some calls one Monday, because I always start with my agents I work with because then I feel good because they're answering my calls. Right. They want to talk to me. But as you start getting down the ones that don't want to talk to you, I started hearing that. It's you're the fifth lender, you're the eighth lender. I'm like, because we're all coached the same. We're all coached to call 30 or 40 on a Monday. We're all doing this. You know what? But completely understand. And so I just stopped doing it.
It shows the change. It shows for sure a shift in the market because I wasn't hearing from lenders last year because we were so busy and the lending was such a hot thing, right? Everybody's buying. And now that it's slowed down a little bit.
December hit and it's like, boom.
People are,
Right. And it's one of those things, And a lot of times 2 years ago, a lot of lenders were focused on refinances. So
correct.
I was one of the few lenders who actually did the same amount in 2021 and 2022 because I've always focused on the purchase market. Mm-hmm. So even if I didn't do as many refis as some, my purchase volume was still up there. So, I had back-to-back years of 24 million, where you had a lot of loan officers drop 40, 50% last year because they had just been focusing on refinances. They haven't been talking to realtors. They hadn't been doing this. But so that's why now they're all trying to get back to the basics of doing that. So that's to answer your question, Maggie, I always just do the basics and try to stay in touch and stay in front of people.
I love that.
So it helps me avoid a lot of the ups and downs. So I didn't make as much in 2021 as some, but I made a lot more than a lot in 2022 because my business didn't go anywhere.
Yeah, we talk about that all the time. It ebbs and flows. It comes and goes.
Yeah, but staying consistent and staying at the basics is always like a good thing.
Just generating activity. So, and that's what I like about you guys and kind of what you do and how you're set up here is your funnel, your process flow, your systems. So you never really feel like you're not busy.
No, it's all about filling the pipeline, right? And even if stuff is like, we have buyers that are pushed out to the end of summer, some next fall, and that's okay. They're getting still a phone call constantly from us that we're in front of their face. Then when it's time to pull the trigger, we're right there. Because otherwise, you know how fast they move. They're on to the next and best realtor and lender. So.
Because if you're not, if you don't stay in front of them and you think that they're not ready until fall, but all of a sudden they're ready at the end of June, like you don't know that because you haven't stayed in front of them and you're not the person that they contact when they say, I am actually ready now. So
I know, and we get frustrated when that happens, but in reality, that was our fault. Like
exactly,
we didn't do enough to keep them engaged to stick with us through that 3, 4, 5 months. And we all are guilty of that at times, but yes, you're less likely that to happen if you've got the systems in place and you're doing the daily activities. So I'm just a big fan of, it's kind of more the military in me, but just, You get up, you go to the
Structure.
office, you've got your plan for the day, and you just kind of go through that process.
So then that brings us to our whole thing here. So work-life balance. So what are some things that you do in your life to keep that balance?
Well, it's funny when we were talking about me coming on here. One of the things I kind of tell people a lot through the years is doing what we do. You have a lot of flexibility, right? So I go back to my son, when he was playing tennis and doing some things, and my daughter on her dance competitions, right? So she's been dancing for 11 years. I don't think I've ever missed a comp, right?
Aw.
So sometimes I laugh. Where I struggle sometimes is you're so cognizant and so worried about having not spending enough time with the family that sometimes I'm guilty of spending too much time on the life part and maybe not as much time, on the work part. But I do think that at the end of the day, your family, your kids, they have to be the priority, and you want to be there for them. But sometimes we always have to remember that missing this event or this event in the grand scheme of thing isn't the worst thing on the planet. Yeah. So, but I do a really good job in that aspect. We usually, we'll take a family vacation every year, just the four of us. We normally will do a cruise because you have to put your phones in the safe. So for 7 days, they're forced to eat dinner with us, our kids. There's no phones, right? So there's no work, there's no anything, right? Yeah. Because you know how it is. If we go to the beach, you got your cell phone.
No distractions.
You're going to answer the phone, right?
Well, I just called you 2 days ago and you were walking in Charleston.
I was in Charleston, right.
Doing a college visit, and you're like, I'm sending the app over, and it's like, honk, honk. All the traffic.
Charleston a little busy on that street.
That's okay, but that's you were trying to balance family and work.
Exactly. So, and
we do it all the time.
Right. And my wife and my kids understand, like, this job, the flexibility affords us to go to Charleston on a Monday, right? Or, 4-day weekend. But they also know that, hey, I'm going to send out and take calls. Mm-hmm. I'm going to bring the laptop. There may be times when they're enjoying dinner when I'm working on some loan apps. Yeah. But we're still together. Yeah. We're still being able to do that. Because there are a lot of jobs where you don't have that flexibility.
No, you can't even
you're
go.
Stuck in the office 9 to 5. Yeah. To get 2 days off, you have to ask for it. It's not pay, it's this or that. So, over the years, I've just tried to kind of walk that fine line of making sure that I take advantage of all the benefits and flexibility our careers provide to us, while also understanding there's times when you don't have the flexibility. There's times on a Saturday afternoon you have to take that phone call because a lot of people are looking at houses on Saturdays and Sundays, right?
Exactly.
But that our job also allowed me to hang out at my kid's school Tuesday in the afternoon, right? Yeah. So you just have to balance that give and take. And every industry is different. But for us, I think we're super fortunate and kind of crazy to do what we do, but it does afford a lot of opportunities to be with your family, to do more travel and to be at these events, because anywhere I've got a cell phone, I can work.
You can work.
Right.
Sure.
Yeah. I've got a team back at the office. So those are the kind of things where I've always just kind of been present and, never wanted my kids to feel like, dad's never here. He's so busy. Always doing that. I mean, I like being able to do these trips or this and that, but dad's been on his phone the whole time. So it's definitely a balance, but it's definitely a challenge, to achieve that balance. But I feel like I've always done a pretty good job of being present.
Yeah, I think you may be the only guest that's actually feels that you've conquered this.
That's so funny.
You really have conquered the work-life balance.
Like, I don't have it.
I don't have it. We say we don't have it. I mean, we try to.
And Jim's like, no, I got this on lock.
Yeah,
because life.
Awesome.
Life is short. It's one of those things where you can't get certain times back, right?
For sure.
It's gone. And there are times when I'm not the best at it. There are times when maybe I'm not as present as I should be. Mm-hmm. But at the end of the day, it's kind of just focusing on really what's important. Why do we do this, right?
Yeah, right.
Yeah, I mean,
your livelihood.
Yes, we do it to generate income, to make better lives for our kid, this and that. But all that's useless if you're not spending it on that. You know what I mean? If you're not taking advantage of some of the perks of what we do. So for me, that is one thing. It's funny with my mortgage coaches and whatever. I don't challenge with that as much as some. Like I said, if anything, sometimes I'm a little too life.
Okay. It's good for you.
Right. So,
we probably wish we were a little more about
But it goes back to your systems, you know what I mean? And it's a little bit easier for a lender, I think, than real estate agents, right? Because you guys are out, you've got to be out. You've got to be showing houses. Like if you're out of town, you can't take a buyer to go see a house, right? You're going to have to pass it off or this or that. Whereas for lenders, it can be a little easier because we're not meeting face-to-face anymore with our clients, right? I'm texting apps. They're doing online applications. They're uploading documents.
Right.
They're not. I think I've had 2 clients come into an office in the last couple of years, right?
Be mobile.
So for us, we're a lot more mobile. We can work from anywhere. So it's a little easier for the lenders in y'all's defense, like because you guys have to be present. You're interacting with those buyers. You're showing them 17 houses, right? You're having to, walk through that home inspection report with your seller. You know what I mean?
Right.
You're having to make sure the house is staged. So yes, it's much harder, I think, for real estate agents than it is for mortgage guys and girls.
It's okay. I think that's where the team comes in too.
Sure.
Like I can push a lot onto Maggie when I'm out of town with my family trying to do kid stuff. And when she's gone, she'll push it on me. So we get to be able to, it's a good balance in that sense. It's hard for the last 20 years. I was by myself.
Which is
so hard as hell. But now it's like, you're right. You don't get those times back.
No, you can't. Yeah,
kids going to college. I don't want to miss those moments.
Well, right. Yeah. Because not to be cliche, but it goes quick. I get a freshman, about to finish up his freshman year at Auburn. And you're just like, it just seems like, it seemed like we're in middle school just a couple of years ago. My daughter is about, she's heading into her senior year. We're looking at college visits now. So yes, it goes by fast. But like you said, there is a certain amount of work and productivity that you have to do to afford certain lifestyles to afford to be able to go to Charleston for a weekend, right? So you got to do that. But I definitely think it's easier for lenders, right? If any lender tells you it's hard, it's not. We've got processors that are working. We've got team members working.
Yeah, you've got a pretty
we've got our
solid
assistants who's knocking those apps. Right. So for us, it is much, much easier. That's I wouldn't feel that. Right. Well, no, it is. I've always said
you have that balance. A lot of people don't. We rarely hear people say, "Oh yeah, I've got it achieved. I'm good at this." So it's really good that you do, and I bet your family reaps the benefits of that.
Oh yeah, they do. Yeah, we're super close. We've got a great dynamics. So it's it's just one of those things where I lost my parents. Not when I was young, but 30ish and this and that, and it just kind of. Losing, I think, mom, dad, my sister all passed away in about a 6 or 8 year span. And you're just like, so you just start to realize, hey, life is short. You never know. So for me, that's cliche as well. But it definitely has made me kind of shift some focus to where, if I've got to make some calls, I can make those from Charleston just as easy as I can from Brentwood, right?
Absolutely.
So why not join, why not go on that college tour versus saying, oh no, I've got to be in the office.
I can't go,
yeah. Now, technology helps as well.
Sure does.
When I first got into it, you had to go to the office, right? We still use fax machines back in 2000.
100% we did.
No online application.
Right.
It's all in person.
You're calling leads out of a phone book, just random numbers, right? There wasn't what we had now. So, but now, you build a good team around you. Yes. And then, it just make it work. So
you're so awesome, Jim. Thank you for coming on. I think you completely educated everybody on the VA for sure. That was so enlightening, and those are things that we just don't. It's not like a super common loan,
right?
So I think that was awesome.
Awesome. Well, thanks so much. I really enjoyed being on this. So I love what you guys are doing here.
Let's keep making deals and
definitely
working together.
Thank you so much for coming out. I hope it wasn't too far for you.
Not at all. So it's good to get out of that Brentwood bubble sometimes. So
absolutely.
Thank you so much. And everybody, don't forget to like, share, subscribe, all that good stuff. And we'll see you next time.
All right.
Insurance should never be a hurdle when purchasing a home. It's one of the most important purchases of your life and should be handled with proper care.
Whether that be your first home purchase or the next addition to your portfolio, reach out to the Sally Insurance Agency with Shelter Insurance for a free consultation so you are confident that you are protected when it matters the most.
Call Shay and Sally at 865-671-6451.